This is your technical update from the LMAX Exchange Research and Analytics Desk for Friday, March 4th, 2016. Euro dollar. So a nice little bounce in the euro on Thursday, with the market trading all the way back up towards 110 thus far. At this point, the bounce does delay immediate setbacks, though ultimately the overall pressure remains on the downside while the market holds below 110.69, that high we had seen going back to the 26th of February. At this point, look for any rallies to stall out in favor of fresh declines back below 108.26, this week's low, and towards the 2016 base from early January at 107.11 further down. Again, there is still room for a bit of upside over the coming sessions, but ultimately this rally should fizzle out somewhere ahead of 110.69. Really only a close back above that level would put the pressure back on the top side. Sterling dollar. So a nice correction in cable over the past several days since breaking to fresh 7-year low on Monday, though at this point the rally is expected to stall out in favor of the next lower top and ahead of the next downside extension back eventually below the recent Monday low at 38.36 and towards a measured move downside objective at 135, which also coincides with the 2009 multi-year base. Really only back above highs at 144.08 going back to the 19th of February would take the immediate pressure off the downside. Dollar yen. So dollar yen has been locked in a bearish consolidation over the past several sessions, and though it is possible the market could be looking to base out at this point, it really wouldn't be confirmed until the market established back above some key previous support at 116. At this point, look for any rallies to be well capped ahead of the 116 area in favor of a bearish continuation below the multi-month low at 110.98 and potentially opening the next major downside extension towards 107 further down. Again, back above 116 would be required to officially take the pressure off the downside. Euro Swiss. So despite the latest pullback in Euro Swiss over the past several days from multi-month highs at 112, while the market holds above 107.15, the structure continues to favor the upside. At this point, look for the market to base out in the sessions ahead in favor of the next major upside extension back above 112 and towards 115 further up. Ultimately, only back below 107.15 would compromise the recovery outlook for Euro Swiss. Aussie dollar. So Aussie is now trading up to some critical medium-term resistance at 73.85, and if the market establishes above this level, it will be a significant development and potentially force a shift in the medium-term structure. But while the market holds below 73.85 on a close basis, this does suggest that we could see another topside failure in favor of a broader resumption of the longer-term downtrend back towards the 68.27 multi-year lows that were set earlier this year on the 15th of January. Dollar CAD. So dollar CAD continues to extend declines off that near 13-year high from early January at 146.90. At this point, there's scope for additional setbacks towards the 78.6 fib retracement of the October 2015 to January high move, which comes in around 132.30. At that point, the market should see limited setbacks in favor of a medium-term higher low and bullish resumption. Kiwi dollar. So Kiwi is now coming into some critical resistance at 67.75, though ultimately the market would need to establish back above 69 to force a significant shift in the structure. Until we see a break above 69, any rallies are expected to be very well capped in favor of the next downside extension below key short-term support at 65.46 and then towards 63.47 further down. SPX 500. So the S&P 500 is now traded back into a really important zone, and ultimately, even though we've seen a rally, an impressive rally out from the 1808 multi-month lows that were set back on the 11th of February, this market has seen a structural shift over the past few months that favors additional weakness. Therefore, this rally is viewed as corrective, and we should see a lower top carve out somewhere in the 2000 to 2025 area ahead of the next major downside extension back towards and eventually below 1808, opening the door for a measured move extension towards 1600 further down. At this point, only the establishment back above 2025 would really delay or compromise this newly adopted bearish outlook for the S&P 500. gold. So gold continues with its impressive surge, breaking to another fresh 2016 high and very close to retesting this January 2015 high from January at 1307 further up. At this point, setbacks should continue to be very well supported down towards some previous resistance turn support in the 1192 area, with only a close back below that level to compromise the newly adopted constructive outlook for the gold market.